Well, good morning, traders. At least it's morning for a lot of people. It's morning here on the west coast of the U.S. where I'm at, just south of Seattle. Hey, Stefan's calling in from Sweden. Probably not morning in Sweden. Melvin, good morning to you, sir. Yeah, we still got folks logging in. Wow, we got a good turnout. There's a lot of people here. Maybe you guys have lousy weather too. It's kind of rainy here. So it's a good day to be in here with a cup of coffee and looking for some great trades. Nafisa calling in from Dubai. Hey, good day to you. Yeah, so while we're waiting for a few more folks to log in, why don't you type in where you're calling from? It's always fun to see. Yeah, I'm in just south of Seattle, Steve. Delaware, Australia. Paul from the Philippines. Bruce, Detroit. Tacoma. Hey, Alan. You can testify. It's a rainy day. New York, Ottawa, Woodstock, Ontario. Sao Paulo, Brazil. Outstanding. LA, Sweden. Bulgaria, sunny and 27 degrees. I'm envious. Linwood, Brian, so you're close too. About 70 miles. Virginia, Bergen County, New Jersey. Rainy day there too. Hey, no matter what, it's a good day to be finding some good trades, isn't it? How close am I to Auburn? I'm in Olympia. So Auburn's what, 30, 40 miles? Stephen from the Cayman Islands. Everybody's envious, Stephen. Triad, North Carolina, Catherine. Hey, in about 8 or 10 weeks, I'm going to be down there. My son's going down to, oh, you're North Carolina. I'm going down to South Carolina. My son's going to be graduating from boot camp. Finland. I don't know if I've had anybody from Finland before. Miami, Seattle, Terry. Man, I drove up to Fife 2 days ago. I forgot how bad the traffic is. Down here in Olympia, it's not bad. It was awful. Boise. Boise is pretty country. UK. Yeah, it's awful all the time. Nome. No way, JR. Nome, Alaska. We got people from all over the world, literally. Dubai. 39 degrees Celsius. That's hot, man. Okay, well, still got lots of people logging in. Like I said, there's a lot of people here. Glad you all showed up. So I'm Dean Jenkins, founder of FollowMeTrades.com, and today we're going to be talking. We're going to scan. We're going to go look for some good trades. I've got some good ideas already, but I'm going to go through my method, how I do it, and we're going to see if we can uncover some more. I'm going to try and have you leave here with at least 5 good stock and option trade ideas. Okay. England's cool, 16 degrees, probably really close to what we got here, Chris. All right. So before we get started, just a quick disclaimer. Lawyers like this make me do it. I'm a trader. I'm not a financial advisor. And I'm going to be looking at the market. I'm going to be looking for trades. I'm going to call out trades that I think are good, that meet my criteria, trades that I'm willing to trade with my money. But whether any person decides to make a trade, it's really their decision. It's their decision. All trading involves risk. All investing involves risk. And in making a trade, you assume the risk for that. So again, I'm doing this for education, information purposes, not giving financial advice. And whatever moves you decide to make are your decision. What I'm going to do, I like, when I start to scan, I just like to, look for trades. I just want to do, what's going on? What's the big picture? And then I create what I call a thesis. It's an idea. It's what I think is going on. And then I go looking for data to support whether or not that's happening. I trade based on realities, right? It's fine to have a thesis. It's fine to have a expectation about what's happening in the market. But ultimately, I'm going to make decisions and take action based on reality, what's actually happening. And the only reality in the market is price and volume. That actually happened. That actually happened. Oh, I'm not even gonna. It's Naidu, right? I'm not even gonna try your first name, Naidu. I look for wave 3, 4, and 5, Chris. I can trade any of those. Okay. So again, I look at a big picture, I create a thesis, and I take a big list of symbols and I try to narrow that down to a manageable list to go scan through. Then I look for trade setups, right? So I'm going to do that. We're going to generate some lists of trades. We're going to look at them, going to try and find some good setups, and then call them out, write down the specs. And again, you'll walk out of here with hopefully about 5 good trading ideas, stock and option trades. And if you got any charts, symbols you're interested in, I'd be happy to take a look and offer my opinion on those. So everybody got a cup of coffee, tea, water, whatever it is your beverage is, whatever your refreshment is. Let's roll our sleeves up. Let's get to work. So I'll talk a little bit about what I do, the setups I'm looking for real quick, okay? BC, absolutely. It's being recorded. I'll publish a link afterwards. A couple hours after it's done, it'll all be rendered and uploaded, and I'll send a link. I can only look at stocks, Hong Kong stocks that are traded, ADRs on the U.S. exchange. I don't have data feeds from foreign to us exchanges. And I don't trade FX, but I can look at FX charts. I do have the data on Forex charts. So I use a combination. I call it East meets West, right? So I use Ichimoku Cloud, and I use Elliott Wave and a little bit of Dow theory to go find my setups. So just in terms of Ichimoku Cloud, just a quick look at what the indicators mean if you're not familiar with it. You can see there's a yellow line, right? That's the Tenkan line. It's very similar to a fast moving average, calculated differently. Simple moving average is calculated from the average closing price of X number of bars back. The Tenkan is calculated from the highest high, highest low of a number of bars look back. So that's the fast line. The Kaijun is the slow line. It's purple here on my charts. And it's just looking back a longer period. And so we look for crossovers, and that can indicate a change in trend. The shaded area is called the cloud. It's got a leading area, which is the leading edge, which is green line. It's called the span A. It's got a red line, which is the trailing line. It's called span B. Area between is called the cloud, Kumo. And it can predict support and resistance areas. And it really helps know when you're still in a trend as the price comes down to the cloud but then reverses and keeps going. So what we look for is, to be in trends that continue, and then when it breaks through the cloud, that can be a confirmation of a change in trend. And that's really where new trends, right? If we're looking at this chart, I don't want to try and get in this. This is a very mature trend, probably going to end at some point. I don't want to try and chase a trend. I want it breaking, and I want to try and catch the new trend, right? Mark, is there any other way to see other people's questions? Hey, stay tuned for next week. I am switching webinar platforms. I'm fed up with GoToWebinar for that very reason. I'm going to switch over to Omnovia, now known as Webinato. So next time we do this, it'll be there. Hold that thought on FSLR, Lloyd, and we will come back to it. We'll come back to it when we start looking at other charts, okay? So again, I use the Ichimoku Cloud. Primarily, I want to see it break through the cloud and start a new trend, right? And then once I'm in a trade, I use it to help manage it. I use Elliott Wave, and a lot of people roll their eyes at Elliott Wave, or they think it's too complicated, or they've been confused by it by other practitioners. I just have a super simple approach to Elliott Wave. There's only 3 trade setups that I look for. One is a breakout into a new trend, and that would be an impulsive wave 3. I can trade a correction after there's a big move, that's wave 4, and then a continuation after it's corrected. So catch the first breakout, catch the correction, catch the continuation. Those are the 3 setups I look for, bullish or bearish. And I use Ichimoku Cloud and a little bit of Dow theory to help me understand when that's happening. Okay, so I just try and keep it really, really simple and repeatable. My mentor, Bennett McDowell, he's the one that taught me this approach to Elliott Wave. And he wrote a new book recently called Elliott Wave Technique Simplified. It's on Amazon. And I was honored he invited me to write a chapter in it, and I did, and it was really good fun. Okay, Dow theory. I use Dow theory again to help determine if we're still in a trend. I use it to help with stop placement trade management. A very small portion of Dow theory, a very simple view of it is, it just says when we're in a trend, we get a series of higher highs, higher lows, higher highs, higher lows. And as long as that pattern's continued, we're in an uptrend, or for a downtrend, it's lower lows, lower highs, lower lows, lower highs. As long as that continues, we're in the trend. When that pattern gets broken, when we start taking out previous higher lows, price goes below it, there's a good chance the trend has changed, right? The impulsive move is over, we're moving into a correction, or the correction's over, we're moving into a continuation. So I use these rules, again, uptrend, higher highs, higher lows. When we start putting in new lows, pretty good chance the trend has ended. And so I trail my stop up to these higher lows, and when price then stops it out at the end of the, the mature portion of the trend, that's where I want to get out. We can't predict or catch the absolute high, but we want to get out right as the trend is changing, but try and stay with it as long as possible. And so bear trend, lower lows, lower highs, lower lows. Trend is intact until, bam, price goes above the previous lower high. Pretty simple, right? What am I looking for in a trade? I got a specific setup that I'm looking for. I want to, again, catch a breakout into a new impulsive trend, a wave 3. I want to I'm going to trade a correction after there's been a big move, and then the continuation after the correction's over. 3 setups. I want to make sure there's a high probability of winning, and those setups have a high probability. I want clear support resistance for risk management. I want to have a good place to put my stop, and I want a high reward to risk ratio. And I just use some simple math, right? I calculate the risk per share, which is the entry minus the stop, gives you the risk per trade, risk per share. The reward is the conservative in, I have a target range, so it's the conservative or lower portion of the price target, right? I take that and I subtract the entry, and that gives me the potential profit on the trade, and then I divide it, right? What's my reward per risk? Reward to risk ratio. In this example with this math, it's 2.93. I want to be above at least 1.2. I want my winners to be bigger than my losers. If we can keep our winners bigger than our losers, if we can keep a ratio called the payout ratio of our winners to losers, close to 2, we don't have to be under pressure to win that often. Right? We could have a 50% win rate, and if our payoff ratio is 2 to 1, meaning our winners are twice as big as our losers, we're very profitable traders. And if we can push our win rate up even higher, push our payoff ratio up even higher, we're going to be very profitable. So I don't take trades that have the potential to lose more than they're going to make. Doesn't make sense to me. I don't like the math. Okay, so those are the setups I'm looking for. Now, before we go look at some live charts, here's what I want to do. Again, I said when I'm getting ready to scan the markets, I want to do just an environmental scan. So before we look at the futures markets, let's go look at, let's just look at S&P 500. So here's the S&P 500 daily chart, right? And, obvious to the most casual observer, we've been in a very bullish run for a very long time, right? And we got the post-election Trump bump here, right? And if we go to a weekly chart, we can see that we've been in an 8-year bull market. It's been an incredible run. It's been fun. Someday this is going to end, probably, right? This won't go on forever. So you have to start wondering, are we losing momentum? Is it going to turn? No signs of it yet, but we ought to be diligent and watching for that. And in the shorter term, last couple of weeks, it's been pretty flat. And we're not really putting in any new, we put in a very incremental high on the S&P 500, but it's not doing this like it did, or it's not doing this. It may be consolidating a little bit, right? Let's go look at now a shorter term, which is, we're going to look at the S&P 500 futures. This is on a 60-minute chart. And what we can see here is we had a pretty good move up from the middle of April until now, or until early May. And what we see here Remember I talked about Dow theory, lower lows, lower highs. Last couple days we've had lower low, lower high, lower low. We see some negative momentum gaining here. So it looks like in the short term, S&P is going to be pulling back at least a modest amount, right? Is this the big one where, someday out there in the future, we're going to have a pretty good correction, a 30-40% correction to the S&P 500. Not predicting that just yet, but we may have a modest pullback starting already just based on technical indicators, based on reality, right? Again, price and volume are the only realities in the market. And this price pattern, the reality is it's turning negative, it's turning bearish, at least for the short term. A target zone is between these two blue lines. That's a Fibonacci retracement of 38.2 to 61.8 with a midpoint at about 2362. So I'm going to be primarily bearish in the scan. Primarily bearish in the scan here. Hey Ramesh, yeah, I'm recording this. It'll take a couple hours afterwards to render it, upload it. Everybody who registered will get a copy of it. Yeah. Okay. So I'm primarily bearish in my scan, and I want to go look at sectors maybe that have run up pretty dramatically and are getting ready to correct. And I also want to be thinking about what would go up if the market goes down. Well, the thing that comes to mind is gold, right? So there's three sectors that I want to go look at. So what's run up since the election? Technology sectors run up pretty dramatically, and the financial sector. So if I think maybe we're going to turn down a little bit, I would want to go look in those sectors for some trades maybe that are already turning and are going to lead the way down. Yeah, Stefan, I'm agreeing. Yeah, Thomas, the histogram down here at the bottom, it's called the OWL, Optimum Wave Locator. It's very similar to the price oscillator that is installed already, in most trading platforms. If you configure it as an oscillator, this one's called the Optimum Wave Locator. It's from traderscoach.com, and it provides a little bit extra benefit, but similar. Yeah, industrials would probably be another one to look at too, right? But let's focus on the financial sector and technology, and then we'll look at gold, okay? Alan, so what I do, a great way to, you're a good straight man, you set me up here, Alan. He's asking, how do I follow a sector list? How do I find it? A great way to zoom in on sectors is ETFs, is to take a look at ETFs. There's a lot of ETFs that are built around sectors. There's also some websites that just have sector. I'm not sure if I got it bookmarked here on this computer. Yeah, I don't have it. But you can go look up ETFs, and like the big ETF players, right? And here's what's cool: they give you the holdings of everything that's in a particular ETF, and you can download a spreadsheet. Isn't that cool? So here is from SPDR, right? The holdings of the this is XLF, so this is the financial ETF, right? Financial sector ETF, and it's really nice. They give you, here's all the holdings. We got 65 companies, right? Here's all the symbols that are in the in this ETF, right? And we just go plug that into our platform and do a little bit of scanning. And Patrick says analysis tools for ETFs is a good site. There's another site that I really like here. It's called ETFDB database. ETFDB. This is a great scanning and this is a great scanning database if you want to go enter criteria and find ETFs. But again, once I find an ETF, I'm interested in a sector, then most of them will give you a spreadsheet with the holdings in the ETF, and that gives us a list of symbols. Because we want to find individual breakouts, right? ETFs are great for some forms of trading, but you got 76 different symbols in there. It's going to move kind of slowly. I want to find breakouts, man. I want to find breakouts. Yeah, I got the spreadsheet. This was on SPDR website, and you just look, the symbols XLF, and they got a link to download the spreadsheet. Okay, it's pretty cool. Sector SPDR is pretty good for, yeah, Thomas. I think that's where I got this one. Yeah, absolutely. Okay, so I get a list of symbols like this. And now I'm using TradeStation, but other major trading platforms have similar functionality, right? What I want to do is uh, put it into a tool like this where I can analyze it and throw some indicators in. This in TradeStation. This is called Radar Screen, and again, Ninja, uh, Thinkorswim, whatever. They all have similar tools, right? You can put indicators into a table here and get the values. So I talked about wanting to use that. I use Ichimoku Cloud, and what's pretty cool is it gives me all the the Tenkan, Kaijun, Span A, Span B numerical values, and it also says, hey, is the trend up, which means we have a crossover, Tenkan over Kaijun, and it tells me that the price is above the cloud, right? I don't use Chiku, by the way, if you're a cloud person. So if I have a crossover and price is above the cloud, that says it's in a bullish trend. And if we have a crossover down, fast is below slow and the price is below the cloud, it's a downtrend. So that's pretty cool. But now it's a little unwieldy to try and sort and filter all these symbols, probably 75 symbols. So this is the XLK list. This is the tech sector. I've got loaded here. And so what I do, what's really nice is you can grab all this data and you can go throw it on a spreadsheet. And so I've got the XLK data on a spreadsheet here. Excel gives you so many more tools for filtering and sorting, right? And I've also, so I took all that data out of that table. It's here. And then I just put in a quick logic statement. And I said, if price is down, right, fast under slow, and price is below the cloud, that means it's a bearish signal. So I just, put in a and statement over here. And then if trend is up and price is above the cloud, that's a bullish signal. And then I calculate current price and its distance below or above the cloud, because I want to get ones that are breaking out early, right? I don't want it to be 12% away from the cloud. That means the trend's probably already run away. I want to get it as close as possible where it just broke out so I can catch a trend early. So again, the reason I put it in over here into Excel is that I can add these logic statements and a calculation, and I can sort and filter on this any way I want. This is XLK, the tech sector. So I want, my thesis, my original thing was, I think the market's run up, and I think technology's run up, and so maybe I'm interested in seeing if there's some technology stocks that are going to lead us down. So I'm going to I'm going to look for bear signals, and I want to find the ones that are the closest to the cloud. They've broken, but they're close, right? And boom, so I've filtered. Now I've got how many? 12 stocks here that I can go look at that meet my criteria. Now this is a thesis at this point. This is a thesis, and now it has to be proven or disproven. I'm not going to trade just based on this. I'm going to go look at the charts. But I can scan a chart in a couple seconds and determine whether there's any meat on that bone, whether it meets my criteria. So what this is doing is narrowing it down for me from a list of, 73 stocks. Now I've got 12 to go look at in this sector. So I think that's helpful. So let's go look at these and see if there's anything interesting there. And I'm going to go really fast, right? And I'm going to apply the rules that I talked about. So this session isn't intended to be a class on my trading method. I gave you a quick overview of it, but I'm just really going to go, give a go, no go on a trade and on a chart. And then if it looks interesting, we'll do a little analysis on it, right? So the first one on the list here is Intel. So Intel, we can see why it showed up on the list. Price is below the cloud. We do have a crossover, fast over slow. But this is a sloppy chart. It's not great. I don't really like it. So there's nothing there for me. And again, I can figure that out faster than I can say it. Not that interested in Intel. It's okay. Let's just keep looking. WU is Western Union. Interesting that they're listed as a technology company. So I see why it is listed as well, but I'm not crazy about that one either. Payx, Paychex. Now you can see I've already analyzed this one. This one gets my attention. This one is pretty nice. So let me, this one is pretty nice. And the reason I say that is, remember I'm using an Elliott wave, and what I see is a big impulsive move up, right? Big impulsive move up. It's had some pretty wide swings, right? But it hasn't done a full correction yet. Hasn't done a full correction yet. So this looks like it could be correcting. And here's the current correction target zone between these blue lines, 38.2 to 61.8. And so this one's got an entry. I use these lines, right? I put a red line for my stop. That's if price goes above that, I'm out. I put a blue line for my entry price and a green for my target. So this one's kind of pushing the boundary. I said earlier, I only like a 1.2 or more, right? Reward to risk ratio. Now wave 3's over, right? It's peaked, and now we've got clear evidence of the correction beginning. It's had some fake outs before, but notice how the momentum to the downside is growing and the up momentum is dropping off here. And we didn't have that on these other ones. It didn't have diminishing bullish momentum. So this looks like it could be the real one. There's no guarantees, but this looks really, really good. So this is a trade I think we should be interested in. And I'm going to go ahead and write this down and put it on a sheet for you. And this sheet, I'm just generating a spreadsheet here, and then at the end I'm going to let you download it, right? So here is a trade that I like, Payx, Paychex. This is on a daily chart. Direction is short. Entry price is really 57.13. Stop is at 58.98. And the target here is 54.88. Let's make sure that at this current price, the risk to reward still makes sense. Oh yeah, 2.2 to 1. And this is a corrective wave trade. And come on, Excel, let me be in charge. So I'm going to save that real quick. Now I like trading with options. All right, Stephen, go, man. Thanks for showing up. There will be a recording. Okay, so a person could just short these shares. That's fine. That's a legit way to do it. Or we could use these trade parameters, our entry, our stop, and our exit, to go trade it with an option, right? And options, as Stephen is saying, options rule. Options do rule, man. I like options. Okay, I keep option trading very simple. A lot of people ask me, hey, you got a trend there. Why don't you do a spread? It's like, why would I do a spread? Why on earth would I lock my gain down to a pretty small level, have a big risk exposure, be exposed to potentially getting assigned, when I can just go buy puts, right? Let the move make its move and go sell the puts for a profit. And if it doesn't work out, my loss is going to be really small. And if it does work out, I'm going to have an outsized gain. So that's how I do these. Is I go long the puts for a downtrend. I go long the calls for an uptrend. Single side directional option trading, buyer only. And I've heard these stats. People talk about 80% of option buyers lose money. Well, yeah, if you hold it till expiration and let it expire worthless, and some of those are also on, are parts of multi-legged strategies that people bought as hedges. There's a bunch of reasons. If we're managing it the way I do, where I go buy a directional option, right? We make our option moves based off of this. We're going to take profit as it goes into the target zone. We're going to get out if it hits the stop. We're picking a contract that's got plenty of time left on it. We're not going to be around for expiration. So that's my play on options, and we do really well, really well. So for Paychex, I like the September 62.5 put, and I'll put that on the sheet. September there. There you go. I do go in the money, Bruce. I look for a combination of, I only go in the money. I want a high delta, and I just balance the cost of the option with getting the highest possible delta, and I also make sure that there's plenty of open interest, right? We don't want to be getting too deep into thinly traded contracts. Yeah, Tammy, what I do is I look at the chart and I figure out about how long previous moves took. And then what I want to do is make sure that this thing can make the move I want, get down to the target price I want, and I can get out of the contract with more than 30 days left. In the last 30 days of a monthly option contract, there's price decay in the extrinsic portion of the value, which is based on time and volatility. We don't want to let that, we don't want to get into that decay zone where we start losing profit. So I look at the chart and I try to figure out, based on previous moves, how long it's going to take to get to my price target, and then give myself at least, a 6-week buffer is what I'm hoping for, so I can be out of the contract well before it approaches expiration. Not as much, Niraj. Time decay doesn't affect ones that are deep in the money as much, but it still has an effect, right? Because until expiration, they all have a time and a volatility component to the total premium. Hey, Bianca, you showed up. Glad to have you here. It's recorded. All right, good questions. Good questions. Hey, let's keep scanning here. So we found a good one. We found Paychex, right? Let's look at some of these other ones here. ADP. Remember I said, I'm not doing anything magic here. But I said that I can tell within a few seconds whether a chart's worth analyzing. So this one's had a pretty big impulsive move up. It's dropped. The question here is how much profit is left to the expected correction zone. So the expected correction zone is between these two blue lines, and I do reward to risk ratio off of the top one. I'm conservative in this respect, right? Conservative is an adjective in this case, not a noun. And so what I just real quickly look at here is where my stop would be. My stop would be there, right, above this this gap and this last higher high, or lower low, lower high, new low, right? That's where my stop would be. My entry price is at current price right here, right here, and my target is here. Now I gotta blow up my scale a little bit. And what we're trying to figure out is if there's enough profit left, if the reward to risk ratio on this trade makes sense, if there's enough profit. Okay, I was just reading some of the questions. Let me finish this here. So this actually looks pretty good. This looks pretty good. Let's hold this one right though. Let's hold this one and see if there's a better one. This one's okay, but it's a fairly small move percentage-wise, isn't it? Am I not concerned by the daily 200? Don't even look at it, Alan. Don't even look at it. I'm looking at the Ichimoku cloud, and we have broken down through some significant support. So again, I stated up earlier, right? This is my method, right? If some people, a lot of people follow along and they're comfortable. If you're not, that's cool. There's a thousand different ways to analyze the market, right? But I don't look at the 200 moving average. Yeah, so this one's interesting. Let's see if there's some better ones. We'll come back to this one. Just put a little asterisk next to it, right? Another one on the list was TDC. What's going on with this? Teradata. It's a pretty messy chart, right? Pretty messy chart here. So let's look at one more, STX. Oh, so Seagate. Now this is interesting. We got to get a little more data on Seagate here and see what's going on. So that first chart we looked at was like Paychex. We thought was a good trade, right? So Paychex has been going up, and now we're looking for a corrective wave down. This is an Elliott wave 4. Let's look at Seagate. Something different going on here, right? Here's the impulsive move down. This is the primary trend. This impulsive move down, it's bearish. There was a correction. Now it looks like it's heading down again. So this would be a continuation of the bearish move, not a correction. What we want to figure out is if there's good profit left in this one. And let's just see first whether the correction met the rules. It did. It retraced into this Fibonacci retracement zone, went a little bit above it, but it stayed below 76.4, which is the limit. So good wave 3, good wave 4. Let's see what wave 5, the continuation, looks like in terms of a target. Oh, that's beautiful, right? This one has a target down here of 2079 to about $2. This is probably more realistic, right? And here's previous support. So probably wouldn't expect it to go too much below that previous level, maybe a bit, unless things really get bad for old Seagate here. But this looks like a really nice short trade. Yeah, Melvin, it's got that shape, doesn't it? I look back, Brian, get asked that, how far back, how much data do you need? You got to see where the trend began. This is the primary trend, is bearish. You have to look back far enough to see where it started, and it started right there. Hey, Robert, thank you. Thank you. Okay, so let's throw some parameters on this Seagate trade because I like it a lot. So where would I take my entry? Well, I'd like to see it. This is a pyramid trading point. Talked about Dow theory, lower low, lower high, new low. These pyramids call off very special lower low, lower high sequences in a downtrend where some other metrics about momentum are met. The ratio of the momentum to the various legs. It's an indicator from traderscoach.com. It's called Applied Reality Trading. It's good stuff. So if that pyramid gets confirmed, currently it's yellow. If price goes one tick below it, it's going to turn red. So that, oops, wrong color. That would be my my entry price. I use this light blue cyan color for my entry. That would be my entry. And that's a pretty small pyramid. So if that is confirmed, I'm going to put my stop up above here. This last price bar after the gap. I think that's a really good point for a stop. So there's my stop, and my target is just inside this retracement zone, a couple ticks. So let's call it. See, I like to mark my charts up with these lines and with this color code. So when I come back to it, I can instantly see what I was thinking about, what I saw in this thing, and it, you know, without having to scratch my head. And there's my trade parameters. This looks like an outstanding trade, right? On STX. Can I show it on a weekly, Josh is asking? Why not? And so what we see on the weekly, actually, is the same, really the same picture, right? Similar. Big move up, big correction, a failing continuation. So I think the weekly supports a bearish thesis down to the target. Okay. So let's go ahead and I'm going to put this on the spreadsheet because I think this is a good one. Again, I'll make this available so you can download this at the end of the session. Entry is 4106. So this one's not ready yet. We got to wait for price to get down to 4106. Has to be triggered is the word I use. My stop here is 44.98. My target is 2047. That makes my risk to reward marvelous at 6.3. And this is a continuation. And these have a higher probability than the corrections. So this is the best one we've identified so far. What about an option, you ask? Yeah, what about it? Let's check it out. I'm going to be with the September contract. This is a put, and using my criteria real quick. This isn't intended to be a full-blown course in options. I do have a course. These have low deltas. Really don't. Yeah, I like the 50. You're gonna pay a little bit more for it, but we want a good solid delta. So this is the September 50. Okay. Here. You can disagree with me. That's all right. Why is the cloud still up and the bar down? Well, the cloud's turned, right? If you see here, the cloud has turned and price is below the cloud. All right. Alan, how many do I buy? For options, I have a simple approach to risk management, and then I have a advanced method to risk management. So the simple method is don't spend more than 2% of your account on premiums, right? I use 2% as a risk management number. We don't want to have the potential to lose more than 2% of our account on any given trade. We have a formula we use for buying shares or selling shares. That formula tells us with the 2% risk rule how many shares to trade. With options, what we say is don't spend more than 2% of your account on premium. So that would be a $100,000 account, $2,000, right? Now that's the simple method. The advanced method, you have to be able to manage the trade intraday, and you have to be able to project option price with a calculator at the stop, right? If you can do those things, then you can go buy more contracts, but you have to be able to project that 2% loss at the stop price and have the ability to exit the trade if the stop on the underlying stock is hit. That was a mouthful. Does that make sense, Alan? Anybody else? Okay, cool. Cool. Tamar got it too. All right, hey, we got 3 trades listed. One of them was already there before I started the session because I want to get the spreadsheet set up. Let's look at this trade. AJG. Say that fast. AJG. So this was listed in the tech stock, in the tech sector. I really like this one. So pretty orderly chart. Look at this big impulsive move up, right? Long one. Would have loved to have been in it. But now clear evidence, right? Remember I said before I used the word reality. We trade based on reality. And the reality is, right, using Dow theory and Ichimoku Cloud and Elliott Wave, all together, they're all screaming, this thing is beginning a correction. We got lower lows, lower highs, lower lows. We've broken through the cloud. Fibonacci retracements are giving us a correction target. Fibonacci 38.2 to 61.8. Now between these blue lines, conservatively, I can put a price target right here, right, just inside that zone. So I've got a nice stop, 5706. I got an entry right now because it has broken down through the cloud, right? We've seen the momentum indicator turn negative. We got a nice entry right now. Got a nice price target here. This is the reward to risk on this one is 3.2 to 1. And I would trade that with an October $60 put. Yeah, perfect, huh? Really, really nice one. So now let's go look at the financial sector. Okay, I got a couple trades in the financial sector. I'm going to use that same method. You know, go get the XLF components, download them, put them on my sheet, run the numbers, do all that kind of stuff, rather than bore you with watching me play with spreadsheets. I'll just tell you what the trades I found are. How's that sound? And then I want, if we have some time, I want to go look at the gold miners and see if we can get some long trades out of the gold miners. Here's Zion from the financial sector. Not a huge percent winner unless you're trading with options. You know, we got an entry price at 39.67. We've got a target down here at 36.01. 36 what? Is it? 36.21. Okay. So percentage-wise on the stock, that's not huge, right? It's, well, you know, 10%. Nothing shabby about that. But it's a high probability. Everything about this trade is really high probability. Yeah, Josh, we'll cover that. Remind me if your question might flow off the screen here as we get farther away, but remind me before we leave. So here's a trade idea. It's Zion. Let me put this on there for you, okay? On the spreadsheet, because I did, when I set this up, said I'd get you at least 5 trades, so I want to honor that. That's a daily chart. That's short. And no surprise, these are all short because that was my thesis coming into it, right? That's what I was looking for. So it's still good. This is a corrective. And I'll start taking symbols here in just a minute. On Zion, we like the October 48. There you go. There's 4. So I'm going to start taking your symbols now. We'll see if maybe you guys come up with a good one, and if not, I will give you one more of mine. Chris, why so much above the price? What do you mean? Oh, why so deep in the money on the option? Because we want a high delta, and we only get high deltas deep in the money because we're going to buy this contract, and then later on we're going to go sell it. And the higher the delta, the deeper in the money, the higher, the more the price of the contract is going to go up, the more profit we're going to make. Right? We have no intention of exercising this or holding it. We want to sell it, right? And high delta means for a dollar move in the underlying, the higher the delta means the more the price of the contract is going to move up. That's what we want. Got it? Okay, you're with me. Great. All right, I'm gonna start taking your symbols now. You guys have been typing them in the whole time, and I'm totally way behind on them. So I'm just gonna go with the ones I can see on the screen, and let's just start with Valiant, VRX. I love Valiant. because you know, if you've been following the news at all, right, it's fun to listen to the news, can draw our attention to charts, but we trade the reality of the charts, and I don't trade the news, right? Valiant has been poster child of many a politician about all that's wrong with big pharma. Regardless of where you stand on that, Valiant's been beat down, right? It has been beaten down from over 200 bucks to, you know, about 10 bucks, and it looks like it may have found a bottom and is breaking out. It's above the cloud. So this will be a higher risk trade, but the potential on this will make, you know, will make you stop and ponder the cosmos. Even at the lower end of the retracement zone, we can't even see on the chart here, it came so far down. The lower end of the retracement here is 100 bucks. Now, will it make it to 100 bucks? I don't know. But, you know, regardless of fundamentals, regardless of talking heads, right, a ton of people are short VRX, and this thing could rally 3 or 4x just based on people covering their shorts. So it could be a go now. It's above the cloud. I'm going to wait. I'm going to let it pull back one more time and put in a new high. I think there's plenty of time here, but VRX is exciting, okay? That's an awesome one, and I like it. Now, so that was LP. Yeah, so a couple more. I'm trying to catch back up here. Bianca was exclamation point and a very nice please. So let's look at yours, DVA. DVA is Davita. So we got to adjust this. Not crazy about it. I mean, there was a big correction here, big impulsive move here. It did correct up. It's channeling, and hasn't broken out yet, so it could head down. We do have some bearish momentum. Got a nice target. It's okay. Look at this. It did put in a new low. It did. It's kind of a nasty channel. It hasn't broken yet. If it does, if it takes this low out again in the next few weeks, then I'd be much more excited about it. SLV for Bruce. Silver, of course. Someday this is going to turn around, maybe, but it hasn't yet. And it took out some major lows here. If it goes and takes out this low, then this trend we were looking at, big impulsive move up, nice correction, looking for a new trend. If it takes out this low, this whole analysis is broken down and is no longer valid. So you can't short it, you can't go long. So in a holding pattern on SLV right now. NVIDIA, a couple people asking for NVIDIA. Yeah, so what a beautiful trend going up. And you know, it's too mature, right? You trying to take this long is, you know, forgive me if it offends anybody, it's being a sheep, right? You're following the herd. And no stock in history has gone straight up forever without a correction, right? Everything corrects. Trees do not grow to the sky. This will correct someday. It could double from here. We don't know. Or it could reverse tomorrow. And so I'm going to look for patterns where I have a probability, right? A high probability where I have an edge about what's going to happen next. On this one, I have no idea. So I would not go long, and of course you can't go short. So that's that on NVIDIA. Walmart for Dean. Well, I like your name. We were looking for a short in Walmart, and it did not come together. So, not yet. Someday. Yeah, there's really not a good pattern here on Walmart. Again, too late to try and chase this up, too early to try and short it. Facebook. Oh, Patrick, SMH, we'll look at that. So this is an ETF, the semiconductors. This is kind of what led me to looking at the technology sector, right? Was this has been an impressive rally, and you wonder if there are some leaders that might start taking us down. We got like Seagate. It looked awesome, like it could be taking us down. So, you know, ho-hum, beautiful trend. Too late to try and join it, and no sign yet. Too early to try and short it. So nothing there on SMH. Facebook. I'm going to sound like a broken record. Beautiful trend. Too late to join. Too early to short. If we ever do get a chance to short it when it starts to correct, it's going to be great, but too early. First Solar, let's check it out. I've looked at it many times in the past, but not for a few months. Now, this is actually interesting. So you can see I've analyzed it before. Let's redo our, I'm glad I'm saying something other than mature trend, too late to join. This is a corrective trend. So it's gotten beaten down. There's the impulsive move. We're looking at a price target here with a lower end of about 43 bucks, right? So here's the problem. Here's the problem on this trade. Our stop is going to be here. Our entry is going to be here at current price. Well, it's not too big a problem. And our target is here. So we actually do have a good, almost a 2-to-1 reward to risk ratio. It's worth analyzing. Just a quick, thing. But here's a problem. Look at this previous high here. That's what the problem was, right? This previous high. You don't want to trade right into a major resistance level like that. So we wouldn't want to take this trade until it broke that, and by the time it does, there's not much profit left. If it pulls back and then goes up and gives us another stop up here, maybe, but it's pretty small, right? So there's a lot of ifs, a lot of contingencies on FSLR, so I wouldn't be jumping into it yet. Okay, TMUS. T-Mobile, yeah. This looks just like Facebook, just like the semiconductor ETF, right? Later this year, maybe early next year or something, there's going to be a beautiful correction on all these. And we're going to make a ton of money because we'll see it coming. We got time, but not yet. PG, I'm never going to get to all these, and I apologize. There's a lot of people. There's a lot of people here. Not very orderly. When you get a big move and 100% or near 100% retracement, it's really hard to predict what's going to happen next. One last one. Let's go. Okay, Snap. I know you've typed it a few times. Let's look at that. Yeah, I don't trade IPOs. Okay, I do not trade IPOs. I want more data. So I really can't offer an opinion here on Snap. Sorry. I trade based on, I'm a technical trader, and I trade based on the reality of price movement. There's not enough on Snapchat. Yeah, let's take a look at some of the gold players here, okay? Let's take a look at those. I did want to do that, some potential long trades. So I'm looking at the GDX components and that are traded in the US. So I'm just going to run through some of these really fast, okay? Bernard, do I only short, is it a hard and fast rule on breaking through the cloud? Most of the time, yeah. Most of the time, because it's been fairly accurate at predicting support and resistance. And what we see is that it follows with an Elliott wave count. It's pretty remarkable. Okay, ABX, yeah, really nothing. It hasn't turned up yet. Indicators are bearish. Newmont. So Newmont's interesting, right? It's not ready yet. And again, under the cloud to my point. But if this breaks above the cloud and kind of takes out this high right here, this is a good one to watch, right? If it gets up to 3650, it's got a long way to go up. So Newmont is definitely worth watching. And the stop would be here, and the target is way up here. So I'm going to put that on that sheet for you. So not triggered yet. It is not ready. Be clear about that. But I'm going to put this on the sheet as a potential long trade if it gets triggered. Targets here. Green. And my stop is here. It's red. All right. So let's throw that on the sheet, huh? And I can't pick an option contract yet because we don't know how long it's going to take and the parameters would change, okay? Yeah, we got one long on here. Not total pessimist. $4.5. Hey, I promised 5. I got you 5. Those are nice trades. And so what I'm going to do, this is Saturday scan. Where to save it? Save as. Okay, okay, okay. I'm going to post it now in the handouts area of the GoToWebinar control panel. There it is. So that sheet is posted, and you are welcome to download that, take it home with you, tape it to your monitor. Trend can be followed by a range, and if it's so, if there is a range or a channeling sideways market, we wait for a breakout before taking it. Becky says, am I going against the 70% overbought soon? Not sure what you're looking at. Are you looking at a, MACD or some kind of oversold overbought indicator? I don't use those, so I wouldn't see it. Yeah, Sean, what I mean by stop is if price goes down to that level, we exit the trade. Yes, we'll sell it. Absolutely. It will be gone like the wind. Yep. And what we're doing there is controlling our loss. So, I've talked about Dow theory, and I said, a trend is higher highs, higher lows, higher highs, higher lows, and an uptrend. And we have an uptrend in place as long as that pattern continues. You'll notice I put my stops at a point where if a previous higher low is taken out, if price goes below it, the pattern's broken, and so it's failed and we're no longer in the trend, and that's when I want to get out, is when reality of price proves that the trend is no longer going our way. We want to get out. That's our stop, and we use the distance between the stop and the entry to calculate our position size so that we all never lose more than 2% of our account on a given trade. All right, hey, we got 5 trades. We've looked at a lot of charts. It's been fun. And what now, if you like what I'm doing, I got hope. I don't need to stop. Yeah, hope is an amazing quality, right? And it gets us out of bed and lets us endure some of the things we have to face. So hope is an amazing thing. It is not a strategy, though. Right? It is not a strategy. What I'd like to offer, if you like what I'm doing here, what I'm doing works for some people, doesn't work for others. It takes it all, right? But I do have a stock advisory service. I do have a live trading room, and they're separate products. But if you're interested in either one, or maybe you're not able to decide, I believe there is Ichimoku on Thinkorswim. I think several folks here on the call are using that, and they're following my methods there on TOS. And I do, yeah. So again, I've got a live trading, a trading advisory service, and I've got a live trading room. For my trade advisory service, right, my here's my resume, right? The returns we've gotten over the last several years. If you want to see the details, you can click in and see every single trade we ever took, right? And we're on track to beat this year so far. So these are picks that I'm taking with my own money, right? I'm not telling anybody, hey, you can take $5,000 and become a millionaire, right? These are solid gains. These are not the kind of crazy gains you see, you know. Yeah, we make 1,000% a month with no losers, right? Yeah, how's that working? These are solid gains using solid risk management, high probability trades, right? So if you're interested in something like that, again, I'm taking all these trades with my own money in my own account. So you can be sure I'm only trying to pick the absolute best. You get updates. You get about 1 to 2 trades a week. I send updates when we're going to take profit, move a stop, close a trade. I call out the option contract and the shares. So we got that. That's available. And then there's also a trading room that we run in the mornings, Monday through Thursday, where I pretty much do what we're doing here, and I call out trades. We analyze the overall market, do some teaching, and some folks really, got quite a good crew in there, and folks like it. So we got the trading room Monday through Thursday, 6:15 to 7:45 Pacific, and that's 9:15 to 11:45 Eastern. So I got a deal for you here. If you're interested in one of those products or maybe not sure, right, stock pick subscription, there's a bunch of information. I got a special offer on the stock pick subscription. So you can try it for 30 days for $39. And here is the URL. I was supposed to have a sheet up to post that. All right, let me get that open. Here it is. So the picks, you can try it for 30 days for $39, which is a pretty good price. After that, it's a discount. The normal price, the list on the web is $127 a month. You can keep going at $97. So try it out for 30 days for $39. You'll get a good feel for how it works. You'll get some good trades. And if it's not your thing, I give you 100% money back guarantee. 30 days. No hassle, no questions, no hard feelings. Right? Give your money back. Live trading room. List price $79. You can try it out for a month for $59. Again, same thing. 30-day money back guarantee. I want people to be happy. If it's not your thing, we're not going to argue. I'll just give you a refund. So there's that. And then here's the big deal, right? Big drum roll, right? You can try the live trading room. You can try the stock pick service. If you sign up for either one before I hang up, so if you sign up before I hang up, you'll get the other one for 30 days for free. So you take a trial of the trading room or you take a trial of the stock options picks. I'll give you a free 30-day trial of the other one. That's only good during this session. So I'll hang on the phone here for 10 or 15 minutes. And after I hang up, the BOGO, buy one, get one, that offer's done. You can still order either other one you want. On average, what percent do I aim to make each week trading? Anybody who tells you see some ads for different educators and advisors going, hey, we make 500 a week or we make 1,000 a week. It's utter nonsense, right? It's fantasy. We have no way of knowing what the market's going to do. We have absolutely no way of predicting what the market's going to do, and it may go absolutely sideways and we'll make zero, or it may take off and we'll be on the right side of it and we'll do really well, or it may go against us and we'll have a little drawdown during a week. So there's no weekly target, right? It's annual, right? I got my annual returns posted on the website. We don't experience big drawdown because we use strict risk management. We don't take big losers, okay? But any educator who tells you they can give you a method to drip money every week in a repeatable way, they are lying, right? They're a fraud, and you can quote me. So if you sign up for a trial of the live trading room, you'll get 30 days of the picks for free. If you sign up for the picks trial, you'll get the live trading room for 30 days for free. So whichever one you take, you'll get the other one. There's some overlap, Joseph, between the picks in the trading room and the picks and the trading room, but each of them have their own unique trades as well. There's a little bit different criteria for them. I wanted to show for the live trading room, here's the members area where you log in. So I've started tracking trades that I call off in the trading room You know, so for the picks, I take every one of those trades with my own money, right? The ones I call off in the trading room, I take a lot of them, but I can't take every one, but I want to identify more opportunities. Because, you know, regardless of your account size, at some point you've got all your capital deployed or you may be overextended into particular sectors. So I can't take every trade I identify. But what I do is track. If I call it out in the trading room and say, hey, this is a good trade, I track my performance on that. And so trades closed year to date, we're up, uh, what are we, 10% in a $50,000 account, right? We've closed 10 trades. We got a 60% win rate. The winners are 2.6 times bigger. So that's the closed trades. And if you look at the current open trades in the trading room right now, we are sitting at, we've got how many positions open? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 open trades, and a snapshot of their current P&L is, don't have to guess, we have math. Throw it over here. So the current open P&L, right? And I've got several trade room members here, and if I was BSing you, they would call me out. They've seen me take these. So another $9,300 in profit that we haven't booked yet. Now, some of these will go farther, some will not, but I trade 0 weekly options, Peter. 0 weekly options. Weekly options are a seller's game, right? And I'm not a seller of options. Or, you know, very short intraday time frames. Our stock and option pick service, similar, you know, open P&L here is in great shape, very healthy here as well. If we were to take a snapshot in time, the picks P&L would be, right, not every trade wins. Picks P&L right now, open trades, $17,000. So we're doing pretty good. We're on track to beat last year's results. Combination, Niraj, combination. It's based on what I actually do in my own account. The percent returns listed on the website are a combination of, yeah. Hey, Thomas, thanks. So the presentation is over. So Kieran, the deal is you purchase one of them. You know, again, it's to take a trial of the trading room. It's going to cost you $59. To take a trial of the stock and options picks, it costs you $39. Money back guarantee. Cancel at any time, right? And if you purchase one of these, you will get the other one for 30 days for free. Now, FISA, where can you get educated on ETFs and options? I have a master traders course, and it runs 6 weeks. I only take 10 students at a time. We're in the middle of it. The next one's going to start on June 8th. So if you watch, I send out emails letting people know when that's going to start again, and I do a webinar to explain how the course works. But June 8th, we'll start the next course. Yeah, look for the email when it comes out and we talk about it, okay? Yeah. Oh, I knew that would happen, BC. Hey, can you send me an email, BC, and remind me, and I'll do that for you. I'll do it. Because I'm going to answer 10 more questions before then and lose it. Yeah. Hey, Steve, thanks. Yeah, Johnny. Yeah, the Master Trader, you know, June 8th coming right up, so love to have you there. Can I look at gold, Becky? Yeah, I can tell you, I look at gold almost every day, and I can tell you we're waiting. It's not ready to go long yet, and we're still waiting. I like looking at the gold futures contract, so I've got the daily chart on the continuous contract up here, right? So we traded this leg. It was a nice correction. We traded this leg. Let's see if we get this higher high, higher low, higher high, higher low, new high. Let's see if we can extend, but we got a ways to go to prove this. We got some unsettling momentum to the downside here. We're under the clouds. We're waiting for this to break up and see if it can take off, okay? Yeah. Send you the link to pay. Which one are you interested in, Cindy? Were you wanting to sign up for the trading room or the or the picks. Sean says, I seem to be legit. Well, thanks, Sean. I try really hard to be legit. Yeah, Tammy, the 59 bucks locked in for life, the discount from the list price. You sign up and you are grandfathered in regardless of whether it goes up or whatever. You got it for life. Trading room for Tammy. Okay. What I'll do is just post it here in the answer to your question. I know some platforms, if you're calling in on a an iPad or a phone or something, you can't see the chat with the link. So there's the, I think everybody can see that. There's the link, Cindy. Okay. Well, like I say, I'm happy to hang out here. The presentation's over. I'm going to stop the recording.